What happens to your mortgage, your stocks, and the entire dollar system if a president actually tries to criminally charge the head of the Federal Reserve for not cutting rates on command? Because that is exactly the movie we're walking into right now. Welcome back to the comment section with Thomas Paul. Today we're talking about something that sounds like a Reddit conspiracy theory, but is very real. A criminal probe into Fed Chair Jerome Powell, a grand jury subpoena, and the growing idea that Donald Trump is basically gearing up to arrest the guy who controls interest rates. And if you think this is just political drama with no impact on your wallet, yeah. No. This is about whether the US still has an independent central bank, or whether the president can just say, cut rates or catch a felony. Let's break this down like adults who also enjoy chaos. Here's the basic plot. Jerome Powell releases a highly unusual public statement saying federal prosecutors have opened a criminal investigation into him and issued a grand jury subpoena. The supposed reason is some testimony he gave about a big renovation project at the Fed's headquarters. But Powell basically says the quiet part out loud. The real pressure is that the Fed has been setting interest rates based on economic data and its legal mandate, not based on what Donald Trump personally wants in the short term. So you've got the sitting Fed chair telling the world on camera that the Department of Justice is threatening him with criminal charges because he refused to slash rates down to Trump's preferred level. That is not normal central banking. That is emerging markets, currency crisis, IMF emergency meeting energy. And here's where it gets interesting. This isn't happening in a vacuum. It's happening with inflation still a political grenade, government debt exploding, and everyone already nervous about a 2025 to 2026 slowdown or worse. So let's hit the key takeaways from this whole Trump versus Powell showdown, and then we'll talk about what to watch next if you actually have money in this system. First key takeaway, this is a direct attack on Fed independence, not a subtle one. The whole reason the Fed exists as an independent body is to take interest rates out of the get me reelected cycle. Politicians love cheap money. Cheap money makes asset prices go up, unemployment go down, and voters feel rich, right up until inflation takes off or the bubble blows up. History lesson. Whenever politicians fully control the central bank, the pattern is always the same. Short-term sugar high, long-term disaster. Hyperinflation, devaluations, banking crises. That's not theory, that's just the chart. So when you have a president's DOJ launching a criminal probe into the person who controls rate policy, at the exact moment that president is publicly demanding deeper cuts, you're basically saying, do monetary policy my way, or I'll see you in court, or maybe in handcuffs. Second takeaway, this isn't coming out of nowhere. Trump has been gunning for Powell for years. He's blasted him on social media. He's talked about firing him. He's tried to push out Fed officials he doesn't like. He's floated legal challenges. And now, instead of just yelling, we're at the use the machinery of the justice system phase. Remember, Powell's term has an end date. If Trump just waited, he could appoint someone more loyal. Instead, we're seeing a push to delegitimize him and potentially remove him by force before that, which tells you the real goal isn't calm, rational, long-term monetary policy. The real goal is rates as low as possible, as fast as possible, regardless of the downstream damage. Third takeaway, this is landing in an economy that is already walking a tightrope. Rates have come down from the peak. We're not at the emergency 0% era, but we're also not at 5.5% anymore. The Fed's been trying to thread the needle, cool inflation without nuking jobs and credit markets. Meanwhile, you've got a massive wave of corporate debt coming due over the next few years that has to be refinanced at higher rates. Government interest costs climbing as old cheap debt rolls into new expensive debt. Consumers stretched. Housing is unaffordable. Credit cards are maxed. Car payments are insane. Fragile sectors like commercial real estate just praying rates don't spike again. Into that mess, the message to the Fed is, you are either politically obedient or criminally investigated. You don't need a PhD to guess how markets react when they think the central bank is no longer independent. Bond markets start demanding higher yields because they're suddenly pricing in political risk and future inflation. Foreign investors get jumpy about the dollar. Equity markets get more fragile because the referee looks compromised. This is why every other major economy pretends their central bank is a boring, apolitical nerd club. The nerds keep the currency from self-destructing. When you start arresting the nerds, you're signaling something much darker about the rule of law around money. But wait, it gets even wilder. There's a non-zero chance this all collides with the 2025 to 2026 recession window people keep whispering about. You already have credible concerns about a mid-decade slowdown, higher for longer rates squeezing growth, corporate and government refinancing costs ballooning, rich valuations in winner stocks that have carried the indexes, a housing market that's tied up in knots and increasingly financialized. If on top of that, the world starts to believe the U.S. central bank is just an arm of the White House, confidence cracks. When confidence cracks, you don't need a huge catalyst to trigger a nasty repricing. So what are the actual implications if Trump really pushes this to the arrest Powell stage? Scenario 1. This is mostly political theater. The probe drags on, nothing concrete hits, Powell finishes his term or resigns on his own timeline, institutional checks hold, markets ultimately shrug. The damage is mostly reputational. America looks more chaotic, the Fed looks less bulletproof, but the plumbing keeps working. Scenario 2. They go hard. Indictments, forced resignation, a loyalist nominated to take over, maybe someone openly willing to juice growth right before an election. At first, markets might even cheer, "Yay, lower rates, pump those risk assets." But if bond traders, foreign central banks, and big institutions start to see the Fed as a political toy, they'll demand a higher risk premium on anything denominated in dollars. Translation: higher borrowing costs baked into the system, more volatility, more pressure every time inflation ticks up. You don't get free money. You just move the bill into the future and multiply it. Scenario 3. Constitutional crisis. Courts get involved, Congress gets dragged in, the Supreme Court has to reaffirm or redefine what independent actually means. In that chaos, every investor on Earth starts asking one question: is U.S. policy still predictable, or are we in coin flip territory? If that sounds dramatic, remember, the Fed isn't some side quest. It's the core institution behind your mortgage rate, your company's cost of capital, your bank's balance sheet, and the value of the US dollar in your pocket. So what should you be watching next if you actually care about your portfolio and not just the memes? Number 1, watch the bond market, not just Twitter fights. If long-term Treasury yields spike while inflation data doesn't justify it, that's the market quietly saying, "We don't like this political risk." Number 2, watch the Fed's internal communications. Do Powell and other governors suddenly sound more defensive, more political, more focused on coordination with the White House? Or do they double down on independence in their speeches and minutes? Number 3, watch for resignations or leaks. If staffers and regional Fed presidents start bailing or anonymously warning about interference, that's your smoke before the fire. Number 4, watch global reactions. If you start hearing foreign officials delicately question U.S. financial stability or see central banks shift reserves away from dollars at the margin, that's a big tell. And number 5, watch risk appetite. If this drama ramps up at the same time that market leadership gets narrower, housing weakens, and corporate spreads widen, you could have the perfect cocktail for a mid-decade reset. Now, does this mean sell everything, move to gold bars and a bunker? No. It means stop pretending this is just cable news entertainment. This is deep structural stuff. Because here's the inconvenient truth. Markets can handle bad news. They struggle with broken rules. If the rule becomes central bankers can be criminally charged when the president's mad about rates, that's not just a policy tweak. That's a regime shift. The last thing I'll say is this: don't get hypnotized by the personalities. You can love Trump, hate Trump, love Powell, think he's a clown, doesn't matter. The real question is, should any president, red or blue, have the power to use criminal law to force a central banker to run monetary policy for election cycles instead of decades? Because if the answer is yes, then you don't really have a central bank. You have a campaign office with a printing press. This video is for education and entertainment only and is not financial, legal, or tax advice. Do your own research and talk to a qualified professional before making investment decisions. You've been watching the comment section with Thomas Paul. I want to hear from you. Is this whole Powell situation overblown drama, or are we sleepwalking into a real monetary crisis? Drop your take in the comments, and if you want more no BS breakdowns like this, hit subscribe before the algorithm forgets we exist.